pranksters! Where are we? The Coliseum! What do we do? Execute! Are you not entertained? The Coliseum! Is this not why you're here? Execute!
What's going on, Cranksters? Welcome back to another Scalp and Chill during the day. FOMC meetings, rate cuts, rate hikes. Kevin Warsh will be speaking. We're going to see, is he bearish? Is he dovish? What does the market bring us? We know in the Coliseum that when we trade, all right, we are strictly sticking to our strategy, which is scalping, our structures, which is our ranges, channels, trend lines. We stick to the education, and we do not do anything except for execute in that way. And so today, I would like to encourage traders that even the most advanced traders get caught on the wrong side of the candles, right? Especially on news days. News days have no place for our formula, for our strategy, our structures. And so, I think today we're just going to be watching the Fed chair, see what they're going to say. I think that the news has already come out that there is no rate hikes. It's going to stay exactly where it was at. But let's see if we can try to get ourselves a good scalp in. But again, guys, normally on news days, we are looking for high probability trades, and news days do not provide that. They provide exceptional volatility, right? Which could be good and bad. Could be good or bad, good and bad. And, for me, I don't like trading these days. I really haven't taken any trades today. Looks like the Coliseum did end up taking this trade here on Bitcoin. It was a nice, good little pop right in here. Me personally, I was waiting for this little local golden pocket right down below us, just a little bit further, but we didn't end up getting it. I do believe that many of the cranksters did already take this. You guys can kind of see here, Bitcoin just kind of putting in these little lows right in here, right? Good little support right in here, and it ended up coming right back up to this resistance. Same thing with USDT dominance. Again, when we look at this, we are looking at USDT dominance. We're looking at Bitcoin. We're looking for high probability trades. Same thing here. To close that trade, we could see that USDT dominance came directly down to this support. We came directly down to this support, got a nice big bounce as this was dumping. And then the same thing, the reason why Bitcoin pumped, right? When USDT dominance. And again, in the Coliseum, guys, get into the Coliseum. We're teaching this absolutely every single day. But look, if we just went to that same 20-minute is the time frame that we trade on, USDT dominance, clear as day. Resistance, resistance, resistance. We go over to Bitcoin, right? And we could look at the exact same thing, and we could say that every single time we were coming down, support, support, support. So they're so perfectly inversely correlated that it's very easy to trade. These are the setups that we're looking for. We're looking for good probability, high probable trades within our structure, so that way we can stick to our strategy, which is scalping. And for me, again, a lot of the times with excessive volatility, Bitcoin's already volatile as it is, you start throwing in news days, FOMC days, Donald Trump tweets and stuff like that. And this is where these strategies kind of go sideways because, again, eventually you're going to have a breakout or a breakdown on this, and you don't want to get caught on the wrong side of those candles. The thing is like even on these longs right in here, I was just telling the cranksters, don't get caught on the wrong side of these candles, because let's just say that this support right here did not end up holding. Next thing you know, you're in a bad spot. You're in a bad spot. You're in a bad trade. You don't want to be caught on the wrong side of those candles, okay? So what we're going to be doing again is we're just going to hear Mr. Kevin Warsh. I do have everything all set up for us, so that way we can listen in, and make sure that what we got going on. Can you guys hear that noise now that I turned it on? If we're on this, you guys can just hear the music. It'll start here in about 6 minutes, right? It'll start here in about 6 minutes. Gates just confirmed that you guys can hear the music playing here for the Federal Reserve Live, and I'll be going back and forth between the charts and this to see if we do kind of if we get a big dip, then I'll probably end up taking that long. Yeah, I'm gonna be patient here, guys. I'm gonna be patient. Again, as far as the trades go, You know, we've been running a nice little you know, a nice hot streak. We had you know, 12,500, 16,700, 6,500 on the smaller account. We're running a on that particular account, we're on a 12 scalp win streak as well. 2 grand, 2 grand, 900, 4 grand. And you know, the whole point, guys, is real day trading. Real day trading is you do not need to excessively overtrade. We wait for our strategy to be presented within our structures, and then we execute. We do not need to deviate, especially on a news day. Especially on a news day, we don't fuck around and find out. There's no need to do that. Was it a little loud? I'll turn down the. I'll end up turning it down the volume once it starts here. So I'll keep an eye on it. Shout out to Gates. What's going on, Terry? Back it up, Terry. Shout out to everybody else. We got some people over on X. We got some over on YouTube. I know there's a lot of options for people to be out there to watch this shit. Again, guys, I'll say it again. Me personally, I don't like trading news days. There's no need for it. There's no need to ruin with you know, our strategy and our structures with excessive volatility on news days. Because look at this. Look at this. This shit's ugly, dude. Look at this shit's ugly. Just wild pump right up to resistance, wild dump again. We're probably coming back down. This is no place, I mean, for no reason. All right. Let's get a little bit of music started here. Get some music started, guys, and then we can, yeah, we'll just wait patiently here for it to begin. All right, for it to begin. I hope everybody's having a wonderful day. We will be doing a Scalp N CHill later on tonight. All right, we will be doing a Scalp N CHill a little later today. Yeah, free solo trading. That's ugly like my last girlfriend. That's an ugly candle, dude. Look at this, just trapping people. And I told everybody too, look at this channel right here that Bitcoin was just, you know, just trapping people. Serious channel. Boom, trapped them. Boom, trapped them. Everybody trying to short this thing, thinking we're just going to completely bulldoze or head down. You know what I mean? Just excessive volatility. Are we going to get washed? I don't plan on getting washed. I absolutely do not plan on getting washed. So let's see what this brings us, guys. Give me just a sec. I'm going to grab me something to drink real quick and we'll get rolling. Let's get this let's get our music going too. Where's our music at here, guys? Where's our music? It looks like everybody be streaming this FOMC like it's something. It's a big old nothing burger, if you ask me. Big fat nothing burger. Good content though, huh? We're gonna see if we can try to catch something, man. I'll only catch something if we come way down here. I missed it. I was picking up my Audi. On this short, I would have definitely shorted this and just plowed this down for sure. Didn't take the long. Wanted it a little lower. What's going on, Jeffrey? What's going on, Andrew? What's going on, Smart Trader? I hope everybody's having a wonderful day, man. Good to see you guys. Again, capital protection. Capital protection is the name of the game right now. All right? Capital protection. Don't go getting fucked today over this stupid news events. You know what I'm saying? We're going to head back up. This thing coming back down. Let's do this here, guys. Give me just a second here. Yeah, and it looks like the news is already... What's going on, Chad? Kind of feels like a Heineken Beer 30 kind of day. I agree, man. I'm kind of with you on that, dude. I've been on fire, so I've just been sober as a gopher for right now. You know what I mean? Just rocking it out, trying to do this. Don't ever leave the table with hot dice, boys. Ladies and gentlemen. They sure did, Smart Trader. They scared the shit, you know. Fucking whatchamacallit comes out, Citadel. Citadel be coming out saying, oh, there's a 27% of a rate hike. Oh my gosh, dude. There ain't no fucking rate hikes, dude. They haven't hiked rates in fucking forever. We're barely just getting our little rate cuts, you know. But the whole point, again, on days like today is capital protection. Capital protection. I promise you guys, you leave your accounts green today, you wake up tomorrow, you're going to feel really good. You go getting fucked over some of this stuff, you're going to be pretty upset because you knew better. You heard it, you know better, all right? You know better. So, but I hear you on that, dude. It's hot too. It is hot outside. Can't find my music. Give me just a second here. There we go. Get some beats rolling. All right. Should be starting here in un momento. I'll flip over. Yeah, size down. Next meeting rate hike is way higher now, but who cares? Yeah. Yep. No need to get caught, guys. This is high volatility, man. Know what I'm saying? And if you are, size down, dude. Size down if you're going to be participating in this. Maybe I'll take a little stab at something. Got a little bit of cushion, but sit back and watch. I'm going to be watching USDT dominance, and I'm watching it right now. This thing dumps down, man, that'd be nice. Kind of get a nice little pop. Warsh is talking right now. I don't know why it's not popping up on this here. Yeah, in 1 minute. And again, guys, I'm telling you guys, even the best traders get caught on these. If you're going to be scalping this, you better be in and out, boy. You better be in and out. You better be in and out. Don't be getting caught. Why is the Fed thing not working here for me? Let's see. Oh, here we go.
Half to 3 3/4%. The committee is continuing its policy of making ample reserves in the banking system. The economy is showing impressive resilience. Even with recent shocks, the trends are positive and reveal solid growth. Job gains have kept pace with the workforce, and the unemployment rate has changed little. Inflation remains elevated relative to the committee's 2% goal. The committee remains resolute. You've heard this before, but we will deliver price stability. As before, the policy statement conveys just the facts. It's steering clear of forecasting, a choice we consider especially prudent at these uncertain times. Uncertainty, however, does not mean a lack of clarity. For some households, businesses, and market professionals, 5 years of high inflation have left a mistaken impression that's hard to shake.
Bitcoin getting a good dump.
The Fed's implicit inflation target was somehow above 2%. Let me reiterate, there is no soft inflation target. There is no soft implicit target, not on this committee's watch. There's only a target, and it's 2%. Not one of my FOMC colleagues is under any illusion. We have begun a new chapter, and we understand that the 5+ years of inflation above target cannot be cured in 9 weeks or by a single month of modest price decreases. This Fed will not waver. Our credibility rests on performing our duties and delivering on our responsibilities. Americans are right to expect that because our nation's prosperity depends on it. To the regulars here in the press room, today's assessment might sound familiar, yet there was nothing inertial about our discussions, our policy, or our strategy. 2 economic developments are worth highlighting. The first is a very notable change since our last meeting 42 days ago. Nominal and real yields are materially higher across the Treasury curve. In fact, some of the increases in market interest rates between FOMC meetings are among the most significant in the last 2 decades, ranking around the top decile or so. But if the committee didn't change its policy rate, what happened? In the intermeeting period, market attention centered on real data and real economic developments. Prices reacted in real time to incoming information, and the reduction in forward guidance may have been a factor. Market participants are learning to play the ball, not the referee. And market prices will continue to respond in the direction and magnitude they see fit. This is, in my view, a change for the better, and we're just getting started. After all, the central bank need not always and everywhere be the center of attention. I understand the desire for rolling forecasts and commentary from this committee, but for our part, we need to observe market reaction to developments, direct and unfiltered. I want to stress, of course, that decisions by this committee matter a great deal. And where necessary and appropriate, we will not hesitate to act. A second economic development is one that I noted at the congressional oversight hearings this month, but it's worth repeating. The most striking feature of the economy is the strong growth of business investment. The surge in high-tech CapEx
Bitcoin trying to stabilize right now.
But that does not necessarily make the Fed's role any easier. In the AI-related category of high-tech equipment and software, the most recent data shows four-quarter growth rates of nearly 20%. This is helping to sustain the healthy momentum of manufacturing output. More generally, CapEx is preparing the ground for future growth. Nonetheless, the precise timing and magnitude of effects on the supply side remain hard to predict. FOMC meetings produce policy decisions, but just as important is candid discussion of the big things that matter most. That too is a priority in this new chapter at the Fed. In our meeting, vigorous discussion centered on four questions, which I will enumerate. First, we talked a lot about the implications of the past 5 years of high inflation on the current policy conjuncture. To echo an old phrase, has the past really passed? Second, my colleagues and I considered the economic shocks of recent years, strained supply chains arising from the pandemic, military conflicts, energy supply disruptions, substantial increases in tariff rates, and yes, the surge in AI-related investment. These differ in their sources. Do they also differ in their effects on output and employment? Third, we took up the related question of price increases arising from shocks. The business CapEx boom,
If you're
for
short,
example,
be
is
careful.
driving up
If
prices
you're
of
long,
memory
be
and
careful.
logic chips and associated AI infrastructure. Do these changes indicate a broader inflationary dynamic, or do we just focus on them because they are under the bright streetlight? Finally, we discuss monetary policy tools and strategies for achieving stable prices. If, as the Fed has long held, interest rate policy should be its primary monetary policy instrument, how much accommodation are we getting from the balance sheet?
Biddy's recovering. Get ready.
In
Let's
all
see.
of this, our
Be
work is
careful.
advancing at the Fed. We're asking the right questions. And in this consequential time, we know how very much depends on getting the right answers. Of course, you've all arrived with questions of your own, so let's turn to them now.
Let's start with Steve.
Thank you for taking our questions, Mr. Chairman. You've had a couple months now, or 9 weeks, or whatever number it is, to see the markets behave in the absence of forward guidance. I'm wondering if you could tell me what message are you getting from the markets as to where policy ought to be right now?
Yeah, so I think officially it's 8 weeks and 4 days, but I'm not counting. The message from markets is the message from markets. What I've really been trying to do, Steve, as I think you appreciate, your colleagues appreciate, is getting an unfiltered message from markets, getting a direct message, letting buyers and sellers meet at prices for treasuries, for the foreign exchange value of the dollar, and then trying to judge for ourselves, what does that mean about our remit? How are we doing on inflation? How are we doing on employment? We're trying not to interfere with that market signal That's part of the reason why we've been somewhat spare in our words, why we pulled back from forward guidance. So they're reacting to events, I would say, much more directly over the 42 days since we last met. This is a good thing. As I mentioned in the prepared remarks, we've seen a material tightening, not just in nominal rates, but in real rates too. And we're observing it. We're trying to stay out of that because, many of you might be interested in our reaction function. We're interested in the reaction of financial markets.
I get that, Mr. Chairman, and I guess the follow-up question is, if the markets are talking to you, what do you hear them saying? And if it's real rates are higher, it would suggest that that's where the funds rate ought to go.
Yeah, so,
Sorry.
I'm sorry, it's your question. So, interpreting markets is an imperfect business. We central bankers, like market pros, can think these things are overdetermined, but let me offer some speculation. First, as we said in the FOMC statement that you got at 2 o'clock, the economy output is solid. CapEx and productivity are strong. Labor markets solid, steady.
There goes Bitcoin off of those words. Here we go. Let's see what's going to happen. Be careful, cranksters.
If I were to try to break down, disaggregate the treasury market signals, I wouldn't be able to do it perfectly. But the bond market's saying many of those same things. And that's why we're seeing a tightening both in nominals and in reals. Even while at some level we haven't done much in 42 days, the markets have done quite a bit.
Claire Jones, Financial Times. You seem to have got the family fight you were after at this meeting. We saw
Brother.
we saw three dissents. Could you characterize the arguments that those dissenters put forward, please, and tell us a little bit why you weren't persuaded by them at this stage? Thank you.
So I guess I shouldn't give you their best arguments. I'll give you some others. So you're right. I asked for a good family fight and I got one. That's the purpose. That's the design feature. I come into this meeting, even this press conference, heartened by what I've experienced the last 2 days. Most of our discussion were on the big questions that matter to the conduct of monetary policy. We didn't sort of hide from them. We weren't scared of them. There was a lot more interaction between and among my colleagues. It was a real family fight. My view, which you've long heard, is that's the better way to get policy right. That's our North Star. So there was a lot of agreement that I heard that we have the powers, the tools, also the authority to deliver stable prices. No walking back from our responsibilities. There was a large majority support for the decision that we made in the room. But I also want to leave you, Claire, with one other impression. There was nothing inertial about that discussion. It was an active, robust discussion about what's in the full range of what we can do and might want to do in the period ahead. You characterized accurately there was a disagreement about a decision today. I would say that doesn't sort of capture the full essence of the discussion. The path to central bank heaven requires delivering on our remit. These days, that means delivering on price stability. I wouldn't measure that path in 42 days or any one particular meeting. And I came out of that meeting even more confident that this is the right team to win the battle against high inflation.
How much do you think not going in July was down to the cool CPI print for June?
So in 2 words, not much, not much. I'd like to believe that the committee shares my views, which is the historic problem with data dependence is the data and the dependence. We are not relying on any one individual piece of data as cover or as an excuse or as validation.
If you're long or short, be careful.
What I care about and what I think the committee cares about is trends on the data.
Be careful. Okay.
Sure, we got some encouraging inflation data. I think at the meeting 42 days ago, I said something like 63 months of inflation above target. I didn't say 64, though the final calculation might be a close one. So we'll be watching inflation data over the period ahead. But I also don't want you to leave the misimpression that we're sort of breathlessly waiting.
Here we go.
I've called for a task force to revisit both the private
back to
and
the task
public data
force.
we use to make our decision making. That task force is out doing their work. I'll
What
be
do you
checking back in with them the next couple of weeks.
Real quick,
But I wouldn't say we overly relied on any
everybody.
one piece of data,
Real quick,
including that data,
everybody.
which surprised some.
You guys want to keep hearing this? Real quick, while we're looking at this, I took a stab on a long. We're up $20,000. $20,000, Mr. Warsh. You the man, boy. You the man, Mr. Warsh. Let's just put this here, and let's pull this stop loss up to like right there, so that way I lock in minimum, bare minimums. We're going to lock in 15 grand. Thank you, Mr. Warsh. You the man, Mr. Warsh. Thank you, buddy. We truly, truly appreciate everything you fucking do at the Fed. Woo!
Apart from trying to influence those, market judgments have moved up
Dangerous
on
out
what
there.
nominal
That
rates
shit be-
are
that
across
shit be-
the treasury
that shit
curve.
be dangerous out
That
there,
doesn't
boy.
mean we take them as by dictation, but we're
Mr.
observing them.
Warsh.
So I think it's a mischaracterization to say that markets haven't reacted because we didn't move today. Markets
Stop
are
loss
reacting
getting
in
ready to
real
get
time.
hit for 15 grand.
In the period ahead,
Mr.
we've got
Warsh.
important decisions to make about the policy rate. Markets in the intervening period, I think, have quite a bit of decisions to make. I'll see if I can put it this way. Monetary policy matters not just by what we say or even what we do. Monetary policy matters by how it affects the real economy. And these prices that we see in financial markets is one of the many ways in which it affects the real economy. We'll be continuing to watch that market information, see how it responds to incoming events, and that can help inform our decision making when we meet in 7 or 8 weeks.
Come here and dance with me with Mr. Warsh.
Family fight the last couple of days of you and the other
Mr.
eight members.
Warsh. 21. I think we'll put a limit order at 64,500. We'll trap it. 64,500 will be 27,000. Worst case we make 15. Best case we're at 27. That's the way it's done, ladies and gentlemen. Thank you, Mr. Warsh.
The outset
Thank you.
about
Thank you, Mr.
what's
Warsh.
really happening in the economy with the shocks and absent the shocks. What are our tools and our capabilities? What's the effect on prices on output? I heard a lot of commonality on the questions. Were there different leans on the answers? You bet there was. So could people come to different conclusions? Absolutely. But my own judgment is this is a period of watchful thinking, not watchful waiting.
This is
And I
watchful
think the
thinking. This is
score on
watchful
that vote
trading,
was
Mr.
unanimous.
Warsh.
Colby.
Thank you, Colby Smith with the New York Times. You've mentioned that looking at the Fed's policy tools is one element of a three-pronged strategy to address the inflation problem. So I'm curious
Here we
how
go.
you view the
Getting ready to
effectiveness-
get tapped out for 27. We got 22. Raising stop loss. Oh, come on now. Hold on, let me go back to him. Brother, come on. I'm still watching. Let me get back to
Continues
him.
to be elevated through
Mr.
the
Warsh.
forecast period. Interest rates could well be part of that solution, but I wouldn't say it's in isolation. I tried to describe in my remarks today a point that I made into the oversight committees a couple of weeks ago. I think there was a misimpression by some in financial markets, by some households and businesses, that central bankers like me, we set a 2% inflation target, but maybe we were more tolerable of a somewhat higher inflation target. In economics, we'd call that the revealed preference. And so might it have been rational for people to set other inflation targets somewhat higher? What I heard in the last 2 days, what I've heard in 8.5 weeks is no. We will deliver the 2% inflation target. That is the committee's definition of price stability. So one way, absent the tools that you reference, to ensure that we get there is ensure that expectations are centered around the right number. And I think we've made some progress on that. I am not suggesting we're done on that. It's worth reiterating. And ultimately, the business we're in, Colby, is performance. We are going to be judged by how we perform.
I was sweating.
That's what we intend to do.
Sweating in these
Inflation target,
positions.
making clear
All right,
expectations is one
$5
part of
million
it.
long right there.
Making sure
We were
demonstrate
sweating.
we're responsible for it. We're not blaming as another. And our policy tools, like you referenced, is the third and equally consequential part.
And we are looking to get into our limit order. One way we trapped it, we were going to make 15. I am squeezing stop loss higher. One way or another, guys, I'm either locking in $20,000 or $27,000. Mr. Warsh. Here we go, getting ready to get tapped out. $4.5 million long, $27,000 in profit. Mr. Warsh, who got washed? One way or another, stop loss is in place. In profit, we're still gonna make 20 instead of 15 now. If we get tapped out, no big deal. We're fighting one way or another. Boom, trade closed, $20,000, baby. Mr. Warsh. Mr. Warsh, we appreciate everything you do for the
Conjuncture
Fed
a
with your
little
tactical
tougher,
teams and all the shit
but
you provide.
it's among
We
the
love you,
chief
Bubba.
questions we've asked
Thank you,
ourselves.
brother.
And around the room, people have different views on it. I tend to think in the coming months, we're going to refine that view and have a better judgment. And we're going to have market prices trying to help inform it too.
Mr. Warsh. Brother,
Thank you, Mr. Chairman.
We waited all
Everyone
day for this,
from Fox
guys.
Business. I guess I want to drill down maybe a little bit. What specifically, in your mind, would be the argument then for a pause today?
So I wouldn't characterize what we did as anything like a pause. I would characterize what we did as a rigorous review of the economic situation. I would characterize what we did
We're
as
probably gonna
a
dump. He said, "Don't consider what we
review
did
of
today
the
as a
big,
pause."
hard questions. And I'd characterize it as a view of what our own homework is to try to resolve those questions in the period ahead. If you were to try to force a description that this was a pause, I would say financial market prices would take the other side of that. Financial market prices in this intermeeting period, they didn't pause, they reacted to the inflation data in one direction, strong economic growth in the other direction, and nominal and real rates went up. Did the Fed take an explicit change in its policy rate today? No, but I think that's the beginning of the story, not the end of the story.
And if I could, I did want to ask, not forward guidance, but looking forward. Traditionally, a Federal Reserve chairman uses the Jackson Hole Summit as a sort of a reset of monetary policy. Well, how do you look at the speech that you're going to make in August?
I look at it like a blank piece of paper right now. I have not begun consideration with the incredible team here what would go into that document. I think you characterized it correctly. Historically, at least from my first tour of duty at the Fed to more recent periods, it would be sort of a setting up speech more often than not of what was going to be happening in the fall. I haven't made any judgments on that, but those are judgments we'll have to come to. If I could, in the high mountain air in Jackson, Wyoming, I'd like to also frame the big questions. There is a tendency, especially with the proliferation of meetings and press conferences, to get caught up in the myopic. Did you do this by a quarter or do that? Ultimately, whether we deliver on price
Thank you.
stability matters some, the decisions we make in 6 or 7 or 8 week periods.
After
Matter
FOMC,
more,
I'm
what are
going
the
to
big
Disneyland.
questions? What's really happening with productivity? What's really happening with demographics? What's really happening to the global economy amid the shocks? Haven't made a decision whether it's going to be a
Bitcoin's
big
still
picture
ripping.
speech or whether it's
Real quick, Bitcoin is still ripping, guys. Sheesh. All I knew is that my stop loss got hit. We weren't going to round trip 20 racks, guys. We were not going to round trip 20 racks. I was going to keep raising that stop loss, but I kept it tight. This would have been full TP, right, on the side, another $7,000, but that's okay. Again, we're not looking back, guys. Today is
Especially
high
putting together
volatility.
with the people who
High
might disagree with
volatility.
them.
Do not get caught on the wrong
in the
side
next
of these
couple weeks, I'm
candles.
going to be doing a check back in.
Repeat, do not
giving
get
them
caught
time
on
to
the
sort of
wrong
think
side of these
hard about
candles.
Their agenda, their debate, their schedule, and when they might be ready for prime time. I'll be doing a little bit of that checking, and that may or may not inform anything I have to say in Jackson.
Nick Timmeros of the Wall Street Journal. Chairman Warsh, I want to follow up on Colby's question about policy transmission. You've said there's no cruel choice between stable
Let's
prices
see if this
and
is
full
shortened
employment.
territory, or if she's going to
Rates
just keep
bring
ripping.
inflation down by cooling demand. It's generally thought that can show up in the labor market. If that's not the channel you're relying on, what is?
USDT dominance
So,
back at
let me
support
go back to
again.
first principles, Nick. I don't believe that
These V-shapers, guys, are
either
crazy.
part of our
Something's
mandate
about to
is generally
happen.
at war with the other part. I do not believe that price stability and full employment is an either-or proposition. There have been policymakers over the last several generations who have thought that there is a strict trade-off there. That isn't my judgment. In fact, my judgment is if and when we deliver on our remit, we're going to be satisfying both prongs. We're going to have price stability and full employment. And in fact, if you want to do the most harm to the labor markets, you would run a period of high inflation that's variable such that employers, businesses, wouldn't really know what's going on. So
I'll
I
fire
think
off
the
a
two
short, keep
parts
a
of our
stop loss right
mandate are
above.
equally important.
We got a little
There's no
cushion for
legislative
today.
orphans here.
After the last couple days, we got
I've
some
been talking
cushion.
mostly about price
I'll fire off a
stability
quick
because
short.
we're doing pretty
USDT
well
dominance is sitting at
collectively as a
support
country,
again.
as
I am
policymakers on
firing
the full
off.
employment side.
The short at the
But we're
tippy
doing
top.
considerably
Let's
less
see
well on prices.
what happens, cranksters. Let's see what happens. Well. Let's see what happens, cranksters. Another 5,400. I'll keep a stop loss. I will manually close this and just mark it out. Another 4.5 mil. We're up another $6,000, so that'll be 27K for the day. Let's see what happens on the V-shapers. We know what happens.
The balance sheet
You get
probably works
washed.
through some other channels like signaling and
we
portfolio
go.
balance. We're keeping
see what
full
happens.
abreast of all these tools in making policy.
Let's see
But
what
if
happens.
the suggestion
Biggest
is
thing,
somehow
real
we're
quick,
go-
guys. Diddy Girl was sitting at support. Bitcoin back at resistance. USDT dominance getting the bounce again from back here. V-shapers. V-shapers don't last. We know.
As we sit here today at this press
Here we go.
conference, so I think we've got a reasonable sense of what aggregate demand
Let's see what
looks
happens
like
here,
in
man.
this economy.
Like I said, I'll manually
We're
close this out for an
inferring
L.
aggregate supply. We're making a judgment about what productivity is. And in some sense, there's a race between supply and demand. And the surge in business CapEx in around AI, it's making that calculation a little harder to judge, but in the period ahead, we're going to be trying to judge just that.
And if I could ask, where exactly was the disagreement today? Was it about the inflation forecast, or was it something more around the risks, the tactics?
Yeah, so I'm going to I'll let the dissenters speak for themselves. The way I heard it over the last 2 days was overwhelming agreement on objectives and authority and commitment. I didn't hear anybody walking away from it. The
Sweating it
judgments
out right
as
now.
to how best to
Sweating
achieve
it out.
the
Dump.
price stability, that was probably the question that we were trying to.
About to get washed. Another 11. That's 30K.
Question that was asked is, when do we need to make those harder calls?
Maybe.
When do we need
Maybe.
to
Otherwise,
make
she's
those
just going to keep
decisions?
screaming, man.
And like I said to one of your colleagues, I
see.
was comforted that
We got to keep
markets
watching
in the
USDT dominance. We got to be
intervening
locked
period
in.
weren't reacting to us. They weren't reacting to dots or to speeches. They appeared more than ever to be reacting to real-time events. So they're gauging themselves how restrictive the Treasury curve should be. And that, I think, has been a useful development. We don't endorse any particular market move, but I'd also suggest we observe them with keen interest.
Janelle Marte with Bloomberg. Following up on that, there was more uncertainty in the markets about what the Fed would do at this meeting. To some extent, you might think that's what you want to see. But my question is about, is there a point at which you would not want to surprise the markets if they were pricing in something with higher certainty that was opposite of what you were intending to do? What are the risks that you see associated with that?
Yeah, so it's a good question. Surprise is not the objective function. Surprise is not what we're solving for. We have a clear North Star. What we're solving for is how to make the best decisions. Almost everything else should be in service to that goal.
Here we go.
by not spoon-feeding markets, by not previewing our decisions, by not sort of giving nudges and leans. My colleagues and I have found in the intermeeting period, what we're getting is the views from a very accomplished economist. That's the internals of financial markets. Instead of just repeating or echoing what we're saying back to us, they're giving us somewhat, not perfect,
Come on, Diddy girl,
their own
pop.
judgment. Surprises are not the objective, but at the same time, I would say we didn't come into this meeting feeling constrained by the full range of alternatives we had in front of us.
So some of your peers have continued to discuss how they think about policy decisions, and if you don't offer your reaction function or your way of thinking about it, how concerned are you that you're ceding control of the narrative?
So not very concerned. That's a short answer to the question. When some people that follow the Fed say, well, we don't want your forecast. We don't want your dot. We just want your reaction function. Part of me hears what we really want is your forecast. And what we really want is your dot. In terms of reaction function, let me sort of disabuse people of a question that may or may not be real and be out there. Any central banker, especially a central banker where the labor markets are more or less at equilibrium.
Brother.
Any central banker, when he or she sees underlying inflation moving higher, he or she is more inclined to tighten policy. Again, when you've achieved the other side of your mandate and you see underlying inflation falling, he's more inclined to loosen policy. That's my reaction function, and I don't suspect it will cause people to not continue to pry for more, because the truth is, for a very long time in a lot of countries, coming out of the 2008 crisis, where in crisis mode, we were purposefully providing a lot of information, trying to provide a lot of assurance, trying to tell people exactly what we're going to do.
Bitcoin going to keep
Offering
ripping?
forward
Let's see.
guidance with clarity as if we're tying our own hands behind our back. Well, in crisis mode, that strikes me as a very prudent policy. But in more benign conditions, it strikes me as worth revisiting. But markets and market participants and reporters have learned to devour all that information. So I take seriously that the pullback of forward guidance requires some transition. Reform isn't easy, but our general judgment is going to help us make better decisions, and in so doing, satisfy our remit.
Paul Weissman. There's a mic coming.
Thank you. When you talk about the 2% inflation target, what measure are you relying on?
Yeah, so I'll give two answers. First, let me give the proper standard answer. The Federal Reserve every January outlines a statement of purposes and strategy. And in that strategy document, which I believe was dated January of this year, it describes a measure of PCE inflation as the objective function there. I have enough of my own, so that's our number, we're sticking with it. Who knows come after next January what we might say about strategy. I suspect the task forces might have something to add. But I'll say this, some version of the Lucas critique, some version of Goodhart's law in economics should remind us that when we talk about measures of inflation
Sweating
or
it
something
here,
else,
boys. Ladies and
we
gentlemen,
describe
sweating
those
it. We're
measures
back
as
to
being
break even.
consistent with
Might
our
be getting stopped
objectives.
out. We'll see. We were
We
back to
might
break
make-
even. We were back to break even. Ooh, brother. Ooh, come on now. Back to break even. Let's see. We're playing it.
The strategy document, we're going to
This is
deliver
scary.
2%
Like I said,
inflation.
I'll happily take
not a
a
whisper
$6,000-7,000 loss here, man. You
But
know what I mean?
to
We'll get
achieve
stopped out right
that,
away. I ain't gonna
I'm
fuck with
looking
this
at
thing.
a
So
broader set of inflation
if we
data
do
than
these V
PCE.
shapers on a
So
news day
without
like
sort of
this,
fully revealing my cards,
I'm saying,
I'm trying to understand, like
tough
my
acting, tin
colleagues,
acting.
what's the underlying generalized change in prices that are happening in the economy. It is not a perfect science. I might have said 42 days ago, I've got a task force for that. But we have a data project that's trying to look and see whether we can't separate the noise from the signal. And so if you would hear a message from me, yes, I care about what the PCE prints are. I care about what the contributions are from CPI and everything else. But my lens is broader than that, even though the remit is quite narrow.
It's hot in here, man. I just take off all my clothes. Be sitting here in my birthday suit.
Michael McKee from Bloomberg Radio and Television. I'm struggling a little bit with some of what you've said today, and maybe you can help clarify this. You've said over and over again that your job is to bring down prices, to get prices stable, to hit your target, and that you will hit your target. The market says you're not there yet because they've raised rates, but all you've talked about today is talking about it. And it's not like members of the committee weren't there before you talking about it. So I guess what the American people might be asking is, what are you waiting for?
Yeah. So believe it or not, this press conference is not all I've done today. We have spent an inordinate amount of time in the last 2 days, 2 weeks, looking at our monetary policy strategy, evaluating our tools, thinking hard about the sources of data that we have at our disposal and we wish we had. We've also thought hard about the period ahead. What among these questions will be answered with more clarity, certainly not certainty? So the decision we made today,
Come on. Sheesh, man. We're fighting right now, Cranksters. We're fighting.
But I would tell you that this discussion was far more robust, and our thinking about how best to achieve that target is
We are short
advanced,
from the tippy top.
and over the coming
Tippy
months,
top.
I expect it to be advanced much more significantly.
Hello, Miss Solana.
If you were to if I were to steal a follow-up
see Miss
question,
Solana?
you won't be giving
My
it up.
Frenchie?
If I were to steal a
A
follow-up
little micro
question,
Frenchie.
well, what's the world think about what you've done? I would again reiterate, what we do isn't just about what we say. It's not just about what we do. We're in the performance business.
We're in the performance
And
business.
so,
Yes, we are, sir.
If I look at the Treasury curve, if I look at the dollar, if I look at a lot of things that are internals inside of financial markets, I think what they're broadly saying
Nice,
is,
Francisco.
that
Excellent.
this committee does own it, has the credibility to deliver it, and they believe, like I do, that we will. But I don't want to leave you with a misimpression. We've got no magic wand. This isn't something that we're going to be able to carry out in days or weeks. But we're going to deliver on the responsibility that
baby.
Congress
That's my
gave
soul
us.
baby. That's my little
And
Solana.
today's meeting and the preparation for today's meeting was an important step towards that destination.
I'd like to follow up on the task forces as well and ask what
Here
vetting did you do of people that you appointed to the task force?
Go. Can he do it? Whoa! Brother, here we go. Who's getting washed? Thank you, Mr. Warsh. We appreciate everything you do for us. Again, real quick, guys, we're not going to round trip another 20. That'll be 40 racks for today. We're going to go up for the stop loss. Pull this down for a big fat stop loss and profit right here. We're going to lock in a minimum of 20. Minimum of 20. Whether we get stopped out right now, don't give a fuck. That's it, boys. Ladies and gentlemen, that's all she wrote. Oh, we did, what did we do? We did 40, what is that, $36,000? $36,000 with Mr. fucking Warsh sweating it out. Whew! Let's get back to what he has to say, because, you know, none of this would be possible without Mr. Warsh.
Extraordinary talent.
Thank you, Mr. Warsh.
Depth of expertise.
We appreciate everything you do.
And a divergence of views.
I put that stop
inside
loss there
every committee.
minimum. I don't give a
So
fuck,
they too
guys.
can have a family
It's
fight.
probably going to come all the way back down.
This is not
we were short from the tippy
outsourcing
top.
to
Probably
people
could have
that
locked in
aren't known and
75%.
haven't
I'm
been
100%
vetted.
TP kind of
This
guy.
is seeing whether new ideas
We ain't
can
doing this, man.
catalyze a broader,
We shouldn't even be
better,
trading
more
today.
informed
We
discussion
shouldn't even be trading
inside the
today.
room.
Like I said, do
And
not get
I'm
caught on the
very
wrong side of these
confident that
candles.
We're going to be able to do that. I am impressed by the credentials of these 15
I am
people.
impressed by your
And
performance today, Mr.
Full
Warsh.
disclosure,
Full
I've
disclosure.
known almost all of them for a very long time, and I think they're going to give their best views on the subject. But ultimately, these are decisions we're going to make, and we're accountable to our oversight committees and to the remit Congress gave us to deliver.
Mr. Warsh.
Hi, Ann Saphir with Reuters. Nice to see you again. So I need a little help here too. You've said repeatedly you have no tolerance for inflation, and yet we are seeing above target inflation repeatedly for 5 years and through your term so far. And sure, you have no magic wand, but you have not taken action. You just gave us a little peek at your reaction function as well. You said that if underlying inflation is rising, that you would tend to think that you might need to tighten. And with the exception of the most recent inflation print, that is what we've been seeing. So could you explain what you mean by no tolerance for inflation and what you plan to do about it?
Sure. So, Ann, I hear from you what I hear more broadly from households and businesses: impatience. Deliver it already. This is not an excuse. This is a fact. This FOMC, this board has been in business for 8.5 weeks.
Beautiful, cranksters. Beautiful.
The patience, the impatience that households and businesses feel have been going on for 63 months. We are on the job. We will deliver. We are focused like a laser on making sure we can do it. But the suggestion that we're going to be able to do it with our magic wand is one I want to disabuse you and everyone else of. But the discussion in the last 2 days give me more confidence even than I had 8.5 weeks ago. This team that we have at the FOMC, the support that we have from board staff, and the new hard questions we're asking, we need to resolve those. And as we resolve those questions, get smarter on those, we're going to deliver on the remit. You don't have to take my word for it. If you look broadly at market prices, they are certainly not saying all clear, but they are working in concert to keep us on our toes, and they have tightened financial conditions in this intra-meeting period, and that has given us, that has provided us some comfort that we've got the ability and capability to deliver.
And is your read or your, I guess, faith in markets' ability to sort of make a judgment and then you to take signal from that judgment, how does that affect you when you come up on the September meeting and markets are seeing a near 100% chance of a rate hike as they see now? How does that feed into your decision making and your thinking?
So we're not going to be constrained by market prices. We're not going to be constrained or take verbatim from what the market's doing. But I think it's useful and to understand that markets can be a very good source of information, not a determinative source, not a perfect source. But if we're trying to land the plane and deliver 2% inflation, and we take a very useful source of information and we get it all fogged up by giving it our own forecasts, by providing rolling commentary, I can assure you that we're going to have less information, less ability to land the plane successfully and deliver price stability. We're just trying to make sure that that source of information is as direct and unfiltered as possible. It isn't to the exclusion of data sources and opinions and other surveys. But if you're hearing from me, we wanted to make sure we were getting a better source of information. I think in a relatively short time we are.
We'll go to Brian Chung for the last question.
Hi there, Chairman Warsh. Brian Chung with NBC News. So
here we
you said
are,
you'd be
Brian
open to having press
Chung.
conferences when there's news to make. So today, no change to rates, no forward guidance. For the average household, I guess, what was the news today?
So apparently it was news that I had a press conference. Let me just see if I can offer some clarity on that. Between now and year end, my predecessors and the Federal Reserve committed to press conferences this year. I'm committing to press conferences this year. That might be news to the people in this room and of no particular interest to your viewers and your readers back at home. What I can offer as assurance is that the Fed's on the case. That this Fed
Who you gonna
chairman
call?
feels better
Kevin
about
Warsh.
this board and this committee's ability to deliver than I did when I showed up here on the first day, and I showed up pretty confident. I've been heartened by the reception that I received. No doubt in some of your commentaries today, you'll talk about a divided Federal Reserve. Well, that's not the feeling I felt the last couple of days and the couple of days before it. What I felt was a group of professionals, all with different perspectives, different views, different judgments, but eager to roll up their sleeves and have a family fight, and eager to reform the way in which the Fed does policy, a keenness and open-mindedness and curiosity about that, so we have a far better chance to deliver on the remit that Congress gave us. And so I want to leave you with the optimism of a new central banker that we're committed as ever to deliver and to offer an assurance we will. Thank you all very much.
Well, Mr. Warsh, we do appreciate you in the Federal Reserve and your command center team and everybody that you command to do whatever the fuck you do. Very cool. All right, so we're going to walk through the trades today, guys. We're also going to be walking through the trades, $36,000 in live trading. But here's the thing, guys. There was a very specific way that I was able to catch these scalps. We teach this inside of the Coliseum. Very, very simple. If you guys didn't get a chance to watch last night's video, it is called Simple Trading is the Best Trading. Simple trading is the best trading. And let me just explain here how we walked through, okay? How we walked through, literally live traded $36,000. $36,000 worth of profits, okay? During the Federal Reserve, the FOMC meeting today with Mr. Kevin Warsh. All right, $36,000 all live traded. Now, here's the thing, guys. In order to take these trades, we were blessed today that price action maintained within structure. A lot of the times, the reason why we do not trade news events is because these news events will break our structures, right? They break our structures, and this is why we don't need added volatility. We're going to walk through this because this is excellent. Today, it played out in the Coliseum's favor. It played out within the Coliseum strategies and our structure, right? So when we look at this, and I simply just say, simple trading. Simple trading is the best trading. If we look here, very simple, right? We look at USDT dominance. We have been playing at this the entire time. When USDT dominance, look, resistance, resistance, resistance. What do we do? When USDT dominance comes up to resistance, you long Bitcoin. Look at it, it's date stamped. When USDT dominance is at resistance and it dumps, Bitcoin is sitting at support and it pumps. What happens when USDT dominance, right, is sitting at support? You short the fuck out of it. You short Bitcoin. And so again, guys, in the Coliseum, when I specifically say simple trading is the best trading, look at our absolutely beautiful range with USDT dominance, BTC, USDT perpetuals. Perfectly, inversely synced up. We were blessed today, very, very blessed. All praise to the Lord, because you know what? Today, we didn't get very hawkish news. We didn't get very dovish news. We didn't get no rate hikes. We didn't get I guess he called it a rate pause because he's paying attention is what he was trying to say, right? And again, guys, the only reason I said do not trade news days is a lot of the times you can have break of structures, easy, it's way too volatile. Today was very modest. It was very mild. The only reason why, and I called it out. I told you guys, hey guys, I'm taking the short. I'm stabbing this thing. I'm going to take the short. I took the long. We caught the long from the bottom to the top. Now, the only reason why I took the short was, again, USDT dominance. As we were coming in, remember, we trade on our 20-minute. As we go into the 1 minute here, all right, on both Bitcoin, resistance. We go over here to USDT dominance, support. Brother, does it get any easier than that, Cranksters? I showed you guys live, executed live. We were blessed that today we did not have a break of structure. Our structure is still intact, right? Our trading structure is still intact. $36,000, sweating it out. Absolutely killer stream, guys. If you guys would like to learn how I trade, how I do this every single day with the Coliseum, how I teach this structure, how do we find our structures? Our strategy is scalping. Again, I'm not looking for these massive moves. We're looking for just these little, 0.1%. 1%, just a little bit of leverage, guys. And we can, again, you guys got to think at 10x leverage, that's a 3% move. All right. And all we're doing is trading on the 20-minute USDT dominance, 20-minute on Bitcoin. You guys can clearly see our ranges. Look, right up to resistance, right up to support. We're getting the bounce. We're getting the rejection. That's all she wrote. Very simple, guys. Able to lock in $36,000 worth of trades. Are you not entertained? Get into the Coliseum, guys. Get into the Coliseum. As far as what Mr. Warsh said, as far as what Mr. Warsh said, I wasn't very dovish or bullish. It was just a good nothing burger, a good old FOMC nothing burger, huh? What do you guys think about a good fat fucking nothing burger? All right, Laurent Fontaine. Shout out to everybody that joined me. I know there's a lot of channels, man. A lot of people are out here streaming this, content streaming and doing whatever they're doing. You know what I mean? Trying to understand what the fuck. Guys, get into the Coliseum. We are doing executional trading. We are showing it, how we're doing it, where we're doing it, why we're doing it, the structure, the strategies, the discipline, bar none. Same thing every single day, Cranksters. With that being said, I think we can end it on that note. I'll go ahead and I'll be posting this. Congratulations to some of the Cranksters that if you did end up taking any of the trades. Again, guys, I am not a call group. I teach exactly what I'm doing, how I'm doing it, where I'm doing it, why I'm doing it. Definitely got to add in that none of this obviously is financial advice. It's just day trading is one of the hardest things in the world, guys. This content is for educational and entertainment purposes only. It does not constitute financial advice. Trading involves significant risk, and you may lose more than your initial investment. All trading decisions are made at your own discretion. Trade responsibly. With that being said, Cranksters, get into the Coliseum. I will see you tonight for our Scalp and Chill.
Who are we? Cranksters! Where are we? The Coliseum! What do we do? Execute! Are you not entertained? The Coliseum! Is this not why you're here? Execute!